Morning, you're watching us here on Budget Breakfast. We told you what is the expectation from the budget, what the global setup is, but how should our markets react and what is the setup for our own markets? Both Nigel and I will tell you that. Nigel, start with, yesterday was a good day. What did the FIs do in F&O?
Well, in the F&O segment, if you look at the index futures, they went ahead and they added long positions big time. So close to 18,000 long contracts for every 5,000 short contracts. So the ratio basically was 3 longs added for every 1 short. And now, in fact, the long positioning has gone up to around 30%. Remember, just a few sessions ago, it was down to around 20% approximately. So that proportion has moved up. And the shorts, well, they have relatively come down from that 82% to around that 70% odd mark. Keep in mind, they're very much still net short on the index. But at the start of the series, the net short positions were close to around 1.08 lakh contracts on the short side. That's come down to the mid-80s, 87,000 contracts odd. So some bit of that net short positioning has played out. But though, they continue to remain heavily on the net short side. But Mangalam, otherwise, how are they positioned? On budget day, how are the FIs positioned in the derivatives market and what's the normal reaction we see on a budget day?
Well, you said that, they're net short this time around. That has been actually the case for all the budget sessions that I've seen, at least in the last 4 or 5 years itself. You start from Feb 2020. The FIs went into the budget with long exposure of just around 15%. What did the market do? That day, of course, we had the coronavirus scare, etc. So we saw a 2.5% decline on the frontline index. It was only the next year, which was Feb 2021, after the big rally that we saw, the FIIs were long, 63% long exposure. The Nifty moved around 5%. That was one of the best budget moves that we've seen in the recent past itself. Feb 2022, FIIs again, just net long, with 32%. Feb 2023, which was the last budget, FIIs went into the budget with just 18% long exposure. The Nifty did fall from the highs, ended about a third of a percent lower. But today, after a big move that we saw yesterday and uncertain global cues and the fact that it's an interim budget, the FIIs are still net long by 30%, which means net short of 30%, 70%. Let's see where the Nifty goes.
Well, Mangalam, in an uptrending market, you want to see put writing.
Yes.
And yesterday, that's precisely what took place. So the 21,500 put, there was a fair bit of open interest in yesterday's trading session. In fact, that was the most active strike in trade yesterday. And the premium was roughly around 50 rupees. So there was aggressive writing being seen out there. On the upside, 21,900, well, that's being written for the last few days. And the massive open interest build up over there as well, close to around 25 lakh shares. Because of this kind of a change, you saw the PCR that moved up from around that 0.8 odd. Intraday yesterday, it went to around 0.75. It ended the day at close to around 0.9 odd. In terms of a reference point, when it goes to around 0.65 to 0.7, that's when we normally see a bit of a bounce out there. Let's get you the levels then. Since the 21,500 put was seeing aggressive amount of writing yesterday, the support zone is in this vicinity of around 21,400 to around 21,450. If that breaks, the reference point is the recent low that we saw, 21,140 or thereabouts. But on the upside, the 61.8% retracement of that entire correction from 22,200 to around 21,100 odd, that comes in that vicinity of around 21,800. And going by the options data as well, that's a bit of a resistance zone. We visited that mark actually a couple of sessions ago, and from there we saw a correction. But Mangalam, the last 2 sessions, the Nifty Bank is the one that's outperforming. And that's done very, very well. And that was the call that we made yesterday as well. But in the near term, if you need to see a bit of a pullback, then the 100 DMA becomes a bit of a reference point on the downside. And at that breaks, you don't want that 200 DMA to go at all because intraday it has broken that. But from there, it's seen a bit of a bounce. And the Nifty Bank, the good news is last couple of days, it's been in good form. But mind you, for the month of January, it was a big underperformer led by big boy HDFC Bank.
Led by big boy HDFC Bank, and it's also weekly options expiry today along with budget, so that will play out. And it was the HDFC Bank sell-off that we saw, which reflected in the cash market selling as well. The FIs in the month of January itself have sold nearly 36,000 crores. The DIs have bought, they've done their best to buy about 27,000 crores, but that deficit still remains. And most of that was in big boy HDFC Bank, and that reflected in the way we've seen, the moves of the Nifty as well as the Nifty Bank. The Nifty is just about 2% away from a record high, ably buoyed by both the IT stocks as well as Reliance, but the Nifty Bank has been an underperformer there. It is down about 5.5% from a record high. The recent outperformance that we saw, let's see whether that sustains or not, because if that does, then maybe the record high on the Nifty is not too far away.
Well, that's right, Mangalam. Actually, we had 3 big triggers for today, right? One was coming in overnight from the FOMC. The next one would be the budget, and then would be the expiry. One has played out, and actually it's played out in favor of the bears, because Jerome Powell, well, he sounded more hawkish than dovish. And that was a bit of a disappointment. So post that commentary that came in, that maybe in March meeting itself, we may not get a rate cut. You had the US markets that were under pressure. Risk assets, they sold out. Whether it was the Bitcoin or other assets as well, did see some selling. You saw some cooling off in the US 10-year yield, which came down to around 3.9%. The last time I checked, it was 3.95% odd. And the US dollar strengthened, obviously. The probability now of a rate cut in the month of March, it's reduced from nearly around 90%. It's come down to close to around 38%, thereabouts. So basically, the probability has reduced by half. But the street is very much anticipating that in the month of May or the meeting of May, he'll not disappoint, because 95% are still projecting. I was looking at the Fed futures, and they are saying that, yes, the probability is still 95%. So maybe this rate cut that was expected is a little bit delayed.
Or as they say, may the rate cut happen in May itself. But Nigel, we aren't done with Qs yet, because not only is it the budget and expiry, we have the first of the month auto sales come by as well.
Yes.
That will be a forward-looking data point. Also, the RBI policy on Feb 8th, remainder of the third quarter results, FII flows and regulations around that. There is still some uncertainty around, how the flows are likely to pan out. Also, most importantly, we'll watch out for the movements in HDFC Bank. That would be a big swing factor for the Nifty Bank, and as a result of which the Nifty. And then political developments. We are just a couple of months away from the election, so campaigning for the 2024 India general election begins, and US elections as well. We have, we'll keep an eye out on how that plays out.
All right. Well, so that's the entire trade setup. But
a bunch of other stocks also in the news, for which Sonal joins us. Sonal.
Good morning. Earnings, they continue to come in, and we do have a couple of stocks which will be on our radar. Shree Cement, for starters, it was a good margin performance, while revenues were in line with estimates, and good margin performance came in on the back of lower costs. So EBITDA was at 1,234 crore rupees, margins higher at 25.2%, and net profit came in higher at 734 crore rupees. And volumes, they were largely in line with estimates. They were higher by 11% on a YY basis. Let's talk about Dixon Tech now, because margins were absolutely in line with CNBC TV 18 poll at 3.8%, and net profit mildly lower or largely in line at 97 crore rupees. Indus Towers will also be in focus, because sources have suggested to CNBC Awaaz that KKR and CPP, they are likely to sell shares in Indus Towers via a block deal, and they will be selling around 3,800 crore worth of shares in this particular block deal, which will be offered at 8% discount to yesterday's market price. We have JSPL, which was a good set. It was a margin beat. We had 24.3% margins versus a poll of 19%, and profits also came in at 1927 crore rupees versus a poll of 945 crore rupees. Lastly, looking at Godrej Consumer Products, good numbers, revenue growth of 1.7%, gross margins were higher by 400 basis points, and profits also higher by 6.5%. So it was a good operational beat on Godrej Consumer. All these stocks on our radar today.
Okay, all right. Well, thanks a lot for that, Sonal, for joining in and giving us all those stocks that we'll be tracking as well. But